please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking for you at this hour. Aircel expected to file for bankruptcy under the Insolvency and Bankruptcy Code. This as merger with Arcom looks unrealistic post Ericsson's recovery case. That's an exclusive. Tata Sons wants to go private, will seek investor nod at the next annual general meeting on the 21st of September and require a minimum of 75% votes. Cyrus Mistry, who controls 18% stake, will vote against the move.
With the coming in of the GST, this uncertainty will go away totally. But clearly that is not the case.
JLR President Rohit Suri tells CNBC TV18 that Cess hike will impact their future strategy in the country, adds that GST has failed to remove taxation uncertainties as presumed earlier. That's an exclusive. Market closes flat amidst volatility. Infosys and ONGC lend support while ITC and ICICI Bank drag for the week. Nifty and Sensex see gains of 1.5 to 2% respectively. It's Friday and Kim Jong-un is at it again. North Korea test fires a ballistic missile over the northern Japanese island of Hokkaido. Shinzo Abe calls this unacceptable. US urges China to use oil sanctions on them. Telecom Secretary Aruna Sundararajan says most roadblocks have been resolved regarding the VSNL land sale. Adds that both Tata, Tele and VSNL are working at the nitty-gritties and wish to wrap this up this fiscal. That's an exclusive. In his first interview after becoming the Urban Development Minister, Hardeep Singh Puri tells Network 18 that more capital is needed for a stable contingency fund, as that raising money from the markets is an option to meet urban mission requirements. Well, straight to the big CNBC TV18 exclusive that we broke a short while ago. Gurgaon headquartered telecom firm Aircel is expected to file for bankruptcy under the Insolvency and Bankruptcy Code. Aircel is staring at bankruptcy because it's unlikely now that the company will be acquired by Reliance Communications. Now, this as the Indian unit of Ericsson has moved NCLT against Reliance Communications, seeking the tribunal's intervention to recover dues from the Anil Ambani-led company. Remember, the telecom department has already refused to red flag the Aircel-Arcom merger, citing the Supreme Court order which bans Aircel from trading or sharing spectrum. Now, let me quickly take you through Aircel's shareholding and debt picture. Malaysia-based Maxis Communications holds 74% stake in the telecom firm, and that stake is pledged to the SBI-led consortium of bankers. Aircel's total debt stands at 16,000 crore rupees, of which 12,000 crores is Indian debt. Now, if the company files for bankruptcy, its lender will have to make provision for half of the total debt, and that's roughly about 6,000 crore rupees. Aircel lenders include SBI, PNB, Bank of Baroda and Canara Bank. J&K Bank, Exim Bank, Syndicate Bank have also lent to the company. Both Aircel and Arcom have refused to comment. Aircel is likely to send in its comment on these developments in a short while. Let's move on to another big story, and this is also from the corporate space. Nearly 150 years after it was established, the holding company of India's largest conglomerate, Tata Sons, wants to change its name. Well, it's not as simple as that, a change in name, but a change in status. Tata Sons is seeking the blessings of its minority shareholders to become a private limited company. Now, the company has proposed to amend its Articles of Association and Memorandum of Association. The proposal will likely be taken up at the annual general meeting on the 21st of this month. But this is easier said than done. Around 18% stake in the company is held by Shapoorji Pallonji Group, run by the Mistry family. In fact, minority shareholders in all hold about 34% stake. Now, Tata Sons needs at least 75% of the overall shareholders to support it. The Pallonji Group is set to vehemently oppose this. In fact, here's why. The Mistries feel that this proposal is an act of oppression of minority shareholders, and this they have communicated in a letter that has been sent to the Tata Sons board. Remember, Tata Sons is currently a public limited company. So that means that the Mistry family could legally sell its stake to one of its Tata rivals. But if it becomes a private limited company, Mistries won't have that flexibility to sell their stake. So the basic rationale of this very interesting story is that Tatas want to ensure that they have that complete control and they'll be able to restrict that share transfer. The question is, could there have been some kind of threat? That is something that we will take forward at 5 p.m. But for now, let's move on. The GST Cess hike for luxury cars will have an adverse impact on our India expansion plans. That's the word from Jaguar and Land Rover India's president Rohit Suri. In an exclusive conversation with CNBC TV18, Rohit Suri said that JLR will have to go back to the drawing board for its expansion plan. This as the GST Cess hike has thrown a spanner in the works by creating uncertainty for the industry. Here are some excerpts from that interview.
We have to work through this. This is work in progress. All that we are primarily saying is that the demand expansion that we were expecting and that we were hoping to see, that is unlikely to happen. We have to work through the figures again to recalibrate the demand expansion and then embark on our future expansion and then, rework our expansion plans. There could be an impact on our strategy going forward because of this cess increase. In our country, unfortunately, the industry is plagued with too much of uncertainty as far as the policies are concerned and as far as these, very sudden kind of moves are seen in the area of legislation or taxation. And it does create an atmosphere of uncertainty, and actually the hope was that with the coming in of the GST, this uncertainty will go away totally, but clearly that is not the case, and we have to adapt ourselves to this continuing uncertainty in the market, and which is really not very healthy.
Okay, on to another exclusive from the auto sector. Renault Nissan is planning to make a big splash in the electric vehicle space. The chairman of the company, Carlos Ghosn, told CNBC today that Renault Nissan plans to introduce 12 new zero-emission electric vehicles by 2022. Here's an excerpt.
We have announced the fact that we will have one electric vehicle platform that will be shared by the three companies. We announced also that there will be more than 12 new electric vehicle that will be launched by the lines under the different brands before the end of the plan. We also announced the fact that on all the technology coming in terms of autonomous cars, in terms of connected cars, the work will be done in common between the three companies.
If you look at global sales last year, out of a total of 90 million cars sold, only 0.5% were electric vehicles. What gives you confidence that this number is going to increase in the future?
Technology is developing, becoming more efficient and less costly. For example, today one of the limitations to the development of electric cars is the anxiety about range. And we have announced that during this plan and before the end of the plan, the range will be increased to 600 kilometers. So there is a significant increase in the range of the car. Second, the cost of the car is going to go down. For example, the batteries, we announced that the battery cost will go down by more than 30% during the midterm plan. Plus the fact that many governments are starting to make bold statements about the transportation of the future and the fact that zero emission, it is at the center of their preoccupation.
Okay, now staying with the auto sector, and here's another exclusive. Sources tell CNBC TV18 that Mahindra is looking to rebrand its Ssangyong vehicles in India. The car maker is planning to launch new Ssangyong cars under the brand name Mahindra in hoping of getting more traction. Remember, Mahindra had earlier launched Rexton under the Korean brand with not so good results. Utkarsh Chaturvedi is here with exclusive details. Utkarsh, what exactly is Mahindra's strategy and what's really the rationale of this, given that Ssangyong has been present in India for a while?
Well, Ritika, we have been able to confirm from our sources that M&M is looking to exit the Ssangyong brand from India and instead launch all the Ssangyong products under the Mahindra badge itself. Now, the compact SUV S201, which is built on the Trivoli platform itself, will be launched under the Mahindra badge. Also, the new Rexton, which is expected to hit the Indian markets next year, will also be launched under the Mahindra brand itself. Now, the car maker has been mulling over this option for a long time now, including bringing the Rexton to India as well. Now, remember that the Rexton, which was launched earlier, came under the Ssangyong brand, and what Mahindra was really looking at that point of time was that they will position Ssangyong as a premium identity. But things didn't really work out for the car maker as the UV was not able to garner much volumes. So now M&M has finally decided to go ahead with a single brand identity in the Indian markets to boost the UV portfolio.
Okay, fair enough. M&M, however, did not respond to the query that we had sent out. Moving on to the market action of the day, the last trading day of the week saw a very volatile day of session on the last street, but we ended the day pretty much where we started. So the Nifty ended just 1 point in the red. Sensex saw wild swings across the trading session and a 220-point intraday move before finally ending 30 points in the green. The mid-caps mirrored the Sensex, ending just about 15 points in the green. The Bank Nifty, however, underperformed, with that index falling about 0.3%. Let's bring in Anand Singhal to take us through the market action of the day. Anuj, a flat day yet again. Is bulls kind of taking a rest after the kind of rally that we had seen earlier?
Well, nothing kind of day-to-day for the market. The only key takeaway was that dips are being bought, and especially if the dips happen because of North Korea. So from the low point, the market did make quite a bit of recovery and actually ended not quite at the highest point of the day, but still pretty close to that. In terms of sectors leading the market today, it was IT. So Infosys was your top contributor, HCL Tech, Wipro, all of them were higher. Then stocks like ONGC, Bajaj Auto and Coal India also moved higher in trade. On the losing end, you had stocks like Dr. Reddy's, ITC and State Bank of India. While in the mid-cap end, you had some big gainers like Edelweiss, Graphite, Andhra Bank, Merck Electronics, TVS Electronics and Bombay Burma. So all in all, good day again for the bulls considering the kind of recovery that you had from the intraday lows.
Okay, Anush, thanks for that. We'll have to take a very quick break on that note. Up next, Telecom Secretary Aruna Sundararajan says that most roadblocks have been resolved regarding the VSNL land sale. How? We'll tell you after the break. Welcome back. Chief Economic Advisor Subramanian called on Prime Minister Narendra Modi today, this in order to brief him about the prevalent macroeconomic situation in the country. Sapna Das is here with the highlights of that meeting. Sapna, tell us what transpired at that meeting.
What we have picked up is that probably, a review of the state of the economy right at the Prime Minister's level himself has actually started. Today it was the Chief Economic Advisor who has briefed the Prime Minister on the growth numbers, inflation, inflows, forex and even petrol and diesel pricing. All of this has been covered in a very comprehensive briefing to the Prime Minister by the Chief Economic Advisor, Dr. Subramanian. Now, going forward, what we understand is that these kind of review meetings on the state of the economy are going to continue over the next 2 to 3 weeks. Now, the government is keeping a close that they will decide the future course of action. But what we understand as of now is that depending on what the data indicates, the government may keep certain short as well as medium-term measures ready to boost the economy.
Okay, Sapna, thanks for that. Now, there has been no decision yet in the VSNL land case. That's the word coming in from Telecom Secretary Aruna Sundararajan. Remember, Tata Communications had bought VSNL back in 2002. A decision on the large piece of land in question, which Tata Communications acquired as part of the deal, is now pending. Speaking exclusively to CNBC TV18 earlier today, she added that most of the hurdles for the deal with respect to the case have now been overcome.
No decision has been taken. What I said was that we are in the final stages of concluding that transaction. But no decision has been taken as yet. Once we finalize the scheme of demerger, we will have to take the approval of the cabinet. And then the process will start, because then we'll have to go to the NLCT. Most of the roadblocks have been sorted out. And now, the two parties need to actually, finalize the finer points of the agreement.
Okay, here's the big court story of the day. India Horizon Fund, which holds over 5% stake in Religare Enterprises, has moved the company law tribunal against Religare and the Singh brothers. Now, IHF has alleged mismanagement and oppression of minority shareholders. Ashmit Kumar is here with the details. Ashmit, what did IHF tell the NCLT and what transpired in court today?
Well, all of this concerns a shareholder resolution that was passed by Religare Enterprises in the month of August. The resolution was with respect to an investment of a sum of 500 crore rupees by Religare Enterprises into its subsidiary Religare Capital. Now, this decision to invest 500 crore rupees was called into question by the investors, two big institutional investors to be specific, one of course being IHF, the other one being IDBI trusteeship, and both of them together had moved the NCLT wherein they had sought a stay. Moreover, they had supplemented their demand for a stay with, in fact, making allegations of gross mismanagement, of the need for a forensic audit of the accounts, and how the money is being siphoned off from the books of the company by the Singh brothers. So serious allegations being raised. But importantly, the NCLT observed that even while this petition was pending before the NCLT, IDBI trusteeship separately had moved before the Bombay High Court. That was part one. NCLT also observed that as far as IH, Indian Horizon Fund is concerned, that constitutes a shareholding of less than 10% and hence cannot file an application before the NCLT to seek a relief. So on these technical grounds, we understand the NCLT as of now has refused grant of any interim relief, and in doing so has cleared the decks for the Singh brothers to invest a sum of 500 crore rupees into their subsidiary Religare Capital. Of course, one does need to keep in mind that a notice has also been issued and the hearing will resume on November 8th. Back to you.
Okay, Ashmit, thanks for that. Let's take a very quick break on that note. Up next, North Korea test fires a ballistic missile over the northern Japanese island of Hokkaido. Details on the story after the break. Stay right there. Welcome back. The draft pharma policy seeks to dilute some of the powers currently with the National Pharma Pricing Authority. In an exclusive interview with CNBC TV18, the chairman of the NPPA, Bhupendra Singh, said that there is no reason for any structural changes to the regulator. Speaking exclusively to Archana Shukla, the regulator also slammed pharma companies, saying that their fears over widespread price control are unfounded. He also went on to add that India should never give up its powers to impose a price cap on drugs with patents.
Instead of government reviewing the orders of NPPA, there should be an independent affiliate authority.
Coming to that, yes.
And which is there in other sectors also. And that is how the modern say the system works.
You've also proposed, if we talk overall of the draft pharmaceutical policy, a lot of things in the policy which have been proposed looks to dilute overall the powers of NPPA. There is a talk of bringing in a 3-member committee along with the chairman to look into pricing, and also have advisory an advisory body that will have multiple segments of the society. How do you see this move on the draft pharma policy? Do you think it's in the right direction, or do you think it will somewhere curb the powers of the regulator?
See, the question of power is not that important. It is more of a responsibility. Whether to keep the drugs affordable, to make them available, they don't vanish from the market. They are accessible to people, that in remote areas people get the medicine. So the existing functioning and structure of NPPA has by and large proved its worth, and it has been very successful.
Right.
We already have a 3-member or other 4-member authority. There are members from other ministries also. So it's not to say that it's a one-member authority. We have 4 members. And second thing, as far as experts and advisors are concerned, we do take advices from other sectors, and we have our own expert committee where we have members from the health ministry and other specialized sectors. So I don't think there is a necessity to modify the existing structure.
But right now, when you have the advisors, it's not consensual, as in if one of them says no, NPPA can still go ahead with the price control if they want to. But the draft pharma policy proposes that all 3 of them have to have a mutual consent before a price control decision or any decision by the regulator is taken.
Till date, all the decisions of the authority since 1997 are based on consensus. In no case any single member differed from the this decision of the authority. So, and as per the constitution of NPPA, it is the prerogative of the authority to decide the modalities of its functioning. So I don't think how this question of division of opinion and other comes into picture. All our decisions are based on consensus.
Okay, on to the big international story of the day. Geopolitical tensions have resurfaced with North Korea having fired a ballistic missile across Japan after its nuclear bomb test less than 2 weeks ago. The missile reached an altitude of about 770 kilometers before landing in sea of Hokkaido. The Japanese Prime Minister, that is, Shinzo Abe, condemned the missile test, saying that their country would never tolerate such provocation. CNBC's Cherry Kang reports on the latest.
It was not exactly aimed at the U.S. territory of Guam, but just like what we saw late last month, it flew over the northern part of Japan, and it managed to fall in the Pacific Ocean. Now, let's talk about the distance of this latest North Korean missile, because it actually managed to travel farther than any North Korean missiles in the past. So I think it was a part of that messaging from the North Korean regime to the world and also to the U.S. that our missiles can indeed reach the U.S. territory of Guam, as it was talking about in its latest threat last month. So that distance was actually 3,700 kilometers. If you factor into the fact that the distance between North Korea's capital city of Pyongyang and Guam is 3,400 kilometers, it actually traveled farther than the distance between these two areas. And also, I think it's part of that messaging coming just 3 days after the latest round of the UN Security Council resolution saying that sanctions are not going to stop us. The regime is going to continue speed forward with its missile program. And I think there's always that need to keep testing its missiles. And I think the UN Security Council gave the regime a very good excuse for that. So I think the key takeaway is that the distance and also the part of the messaging and the fact that it's really making it clear that it's not really intended to stop its provocations at this point.
Okay, Sherry, thanks for taking us through that. For now, we'll have to wrap up this edition of After the Bell. Thank you for watching. Stay tuned to CNBC TV18. Taking Stock is up next.